this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to break down your barriers to investing. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going?
I'm very good, Bryce. Very excited for this episode. You set the challenge at the start of the financial year. Let's try and interview all ASX 200 CEOs, which I thought was lofty, but I loved the ambition, and I'm really excited that we've got another ASX CEO today, and an ASX CEO that has been right in the middle of a big news story, and we're really excited that we can have him on and unpack it all on the show today.
Absolutely. We are super pumped to welcome Zlatko Todorcevski from Boral to Equity Mates. Zlatko, how are you going?
Yeah, really good. Thanks a lot, Bryce. Thanks, Alec. Thanks for the opportunity. Looking forward to it.
Absolutely. So for those of you who haven't come across Zlatko before, he is the CEO and Managing Director of Boral. The ASX ticker is BLD. Zlatko's 30-year career spans oil and gas, logistics and steel building products sectors, including CFO for energy at BHP, CFO at Oil Search and CFO at Brambles. So today we're going to be covering off a lot of company basics when it comes to Boral, have a chat about the recent 7 Group takeover, and then also close out with a conversation around people and culture, as we always do. So let's kick it off, Ren, with hearing it from Zlatko himself.
Yeah, Zlatko, we love to start these interviews by having a company leader describe their company in their own words. So to kick us off today, what is Boral?
Yeah, thanks, guys. Look, I'll answer that a couple of different ways. So, what most people would probably expect is me to talk about the fact that we provide concrete for our customers, we provide asphalt, we produce cement, and we've got a number of quarries that produce aggregates that are used in both asphalt and concrete. But frankly, we've morphed a little bit over the last 12 months. We defined our purpose more recently as creating a world that future generations will be proud of. And that's ultimately what the company is going to be about going forward. We don't want to be tied to particular materials or approaches, but understanding what our customers need, their pain points, and how we solve them. That's ultimately what the company's about.
Yeah, interesting. So in research for this, we came across an interesting story about your recruitment process. It seems that it was a classic COVID story. The process was conducted entirely over Zoom, and you only met Boral's chair, Catherine Fagg, 15 minutes before your appointment was announced. How did you find that process?
Yeah, look, it was a completely unusual process. And I guess I'd been a little bit old school in terms of the way I looked at other roles and the way they'd been approached. So I had only ever conducted face-to-face interviews for roles in the past. So this was really weird. And it wasn't completely over Zoom or Teams. There were a number of Sydney directors that I had a chance to meet with face-to-face. This is all obviously pre-COVID. But I had not met Catherine. I had not met Paul Rayner. So the only interaction I had with them was over Zoom through the whole process. And as Catherine said, shortly after I was appointed, frankly, I didn't meet her until the morning we announced my appointment. We were both staying in a hotel. We both met up, drove over to the office in North Sydney. That was literally the first time we ever met face to face. So it was a bit of a surreal process. But I can tell you that what Boral did with the search firm they use was really insightful. They kind of triangulated and calibrated their views through some pretty incisive psychometric testing, spoke to probably the most number of people that I'd worked with in any process I've ever been involved with. So I think they absolutely did their homework. They knew what they were buying, and frankly, I got a chance to really get to know them as well.
Yeah, nice.
I think hearing that even CEOs have to go through psychometric testing will make all the grads who have to do it for their grad roles feel a little bit better.
Yeah, well, it's a little bit daunting when you first start to do it, guys. But at the end of look, I'm 53 years old, so you get comfortable with yourself. You know your strengths and weaknesses. So for me, it's just an opportunity for everybody else to get to know me in a different way.
Now, Zlatko, if you can take us back to the early days when you took over as CEO, you took over in a particularly tough period. Boral had suffered 6 profit downgrades in 2 years, and there was, it was a business that was in trouble. Can you take us back to those early days as CEO? What were some of the big decisions you had to make, and how did you approach turning such a big business around?
Yeah, great question, Alex. So look, frankly, I had a little bit of an insight into the business from a company I was involved with prior to joining Boral. I knew the sector. I knew a little bit about Boral. And frankly, always thought that Boral had the best assets and really strong capability. But I could never tell why it appeared to be always not a serial underperformer, but not optimizing what it could do. I could never really unpack what was driving that. So when I was appointed, I did what I called a listening tour. I spoke to all of our major shareholders. I think in the first couple of weeks, I spoke to 50 of the leaders across the organisation. And it was an opportunity for them to get to know me, but also for me to unpack what's on people's minds, what are they seeing, how are they feeling about it. And then we embarked on what I called a portfolio review. I didn't have any fixed views. Everybody was giving me advice. If you read the press back then, everyone said, well, if you flog the US, then you're going to be fine. I didn't believe that because once again, I thought there was opportunities in Australia and it hadn't delivered what I thought. I didn't really understand the USG Boral plasterboard business. And frankly, I didn't have really well-formed views on North America. So we pulled apart every part of the organisation. Nothing was left unturned. And I made sure that the review that we did was fact-based. Because once again, people were giving me their opinions, but in some cases it wasn't based on facts. So we embarked on a 4-month exercise to pull apart every part of the organisation, understand how they were performing, look at their headwinds, what customers thought about us, our returns and our potential to make those businesses better. So we then got to October of last year, and at that stage, I had completed the portfolio review. And we formed a view at that time that the best performing and probably highest potential part of the organisation was construction materials in Australia. So that first, probably 4 or 5 months in the organisation for me was a lot of analysis, a lot of deep thinking about the organisation and really pulling apart every aspect of it. And then, then the path forward started to become really clear, but it wasn't clear on day one.
So you did mention there the American business, and a key part of your time as CEO has been actually to reverse the North American expansion that was pursued by former CEO Mike Kane. So are you able to elaborate on that a little bit? Why sell the North American assets? What did, I guess, Boral learn from this experience?
Yeah, Bryce. So look, if I go back to that portfolio review that we did, my intention coming into the company was not to sell North America, and it wasn't to sell USG Boral predominantly in Asia. It was to understand where we've got the strongest competitive advantage and where we've got the potential to continue to deliver strong returns over multiple decades. With that lens, it then became clear that firstly, USG Boral in Asia, in the plasterboard sector, was a business where we didn't have a right to grow as Boral. We were in a 50-50 joint venture with Knauf, who are the global leaders, and we're able to finalise a sale with the Bavarians in a really short space of time. So I got to negotiate with them one-on-one, which was fun. But that was about solving a couple of problems. It wasn't a business, as I said, where we had a natural competitive advantage and it wasn't delivering the returns we wanted. And frankly, those sale proceeds of $1.15 billion US helped us solve the balance sheet problem. We then focused on North America, and it was clear that building products in North America always had some really good businesses that hadn't delivered on their potential. So our focus started to be, well, how do we improve the performance? It felt like there were a series of standalone businesses being run that way. How do we think about any combined value from the portfolio that we've got? And once we had a handle on that, then the question became, are we the best people to unlock that value, or is somebody willing to pay more? And we ran a series of processes, firstly on building products, and we're running one on fly ash in North America at the moment. But at the end of the day, Westlake, who's predominantly a chemicals business in North America, branching out into building products, came forward with a bid that was well in excess of what the market expected that building products business to be worth. And frankly, it was ahead of what we would have thought that we could have delivered ourselves. So we signed that deal. It was $2.15 billion US. And in coming weeks, we'll finalise what we do with fly ash. But these are good businesses. The question for us is, are we the best owners and can we unlock the value, or does somebody else see better value elsewhere?
So Zlatko, you mentioned there the strengthened balance sheet, the sales that you have overseen, the fly ash sale that is likely coming is going to result in an incredibly strong balance sheet for Boral and give you the capacity to return capital to shareholders, invest in new businesses or in your existing ones. How are you approaching this decision of what to do with this capital? And can you give us a sense of what might be on the horizon?
Yeah, happy to, Alex. So back in February of this year, we defined and shared with the market what we called our financial framework. So that's all about how we think about the business, the balance sheet, reinvesting in the company, and then how we best return capital to shareholders. And frankly, it really hinges off the fact that we believe that as a company, Boral should be delivering better returns than we're doing at the moment, because that then drives our expectations around the balance sheet and things like that.
Yeah, interesting.
Just to give you a sense, when we completed the USG Boral transaction, that was about 1.3 billion Aussie that we secured from that. We used part of that to pay down debt and get our balance sheet back to the position that we really wanted it to be in. And then we used about 850 million to buy back our shares because we fundamentally believed that what the shares were trading at was below the intrinsic value. So that program of buybacks was executed, completed in July at an average, I think it was $7.01 per share. Now, going forward, we've got the balance sheet in a good shape. We probably have to pay down a little bit more debt if we sell some of the businesses, but there will be oodles of surplus capital. And the question in our mind will then become, what's the best way to return that to shareholders? We've obviously spoken with shareholders in the past. We'll continue to do that, but it'll be a combination or a mix of things like a capital return, which potentially will have tax benefits for shareholders. It could include further buybacks, and it could include a dividend, particularly to the extent we have franking credits, which we don't have a lot of today. So.
Well, look, as shareholders, you love to hear the CEO say that you have oodles of surplus capital. So love to see it. Look, before we jump into having a chat about the recent Seven Group takeover, Zlatko, we'll just take a very quick break to hear from our sponsors. So, Zlatko, at the same time that you were reviewing the Boral businesses, assessing the North American assets, Seven Group entered the share register and slowly started acquiring shares. In May 2021, they then launched a takeover bid, and by July 2021, they owned 2/3 of Boral. Can you talk us through this time? No doubt there was plenty of headlines coming through. We were chatting about it on the show. We'd just love to hear it from your side.
Yeah, sure. Well, if I take you right back to the beginning, Bryce, I was at the final stages of the recruitment process for the CEO role, and then Seven Group became public about their shareholding. So you can't think back, what does that mean? So I spoke with Catherine Fagg about it, and she had obviously been in contact with Seven Group. There was nothing untoward behind it. It was nothing more than, I think, Seven Group realising there was such inherent value in the Boral business relative to what the company had been trading at, that they wanted to take opportunity and advantage of that. And as I've gone out and I've met with a bunch of people since I've started as CEO, including private equity and a bunch of other corporates, it's been clear a lot of people saw the value in Boral, but to their credit, Seven Group were the ones that jumped in and took advantage of it. So, it wasn't a secret. Everybody saw what potential sat in Boral. But if you roll forward then, they obviously crept, as they're entitled to do under corporations law. And then Ryan called me on the evening of the 10th of May and said, oh, by the way, we're launching a takeover, targeting 30%, obviously. Look, that was a surprise. But on reflection, it probably shouldn't have been a surprise for me or the board because, they backed their judgment. They saw the opportunity. They clearly liked the strategy and the approach we're taking and saw more value in Boral once again than it was trading at that time. So, I think it's completely understandable that they would want a larger exposure to that. Now, we obviously had to do what we felt as Boral was in the best interest of all shareholders. And I think the response to that takeover, considering, the Seven Group weren't clear on ultimately what they wanted or the share price that they might ultimately be willing to pay, I think the response, the way we ran that was really good. It coincided with a period where we were already in the midst of executing our buyback. So, that was a process that continued on. But once we announced the North American building product sale and the price we got for that, clearly that gave Seven Group the confidence to up their offer to 730, 740 under their structure, and a lot of shareholders sold into that. So they're at 70 or 69.6% today. Ryan's back in the boardroom. He's chairing the company these days. He and I talk regularly, multiple times per week. What I can say, completely aligned on strategy, very supportive of the direction, and continues to see value in the business going forward.
So, Zlatko, it would have been a particularly, I guess, noisy time for you when the existing Boral board were rejecting or recommending the rejection of the takeover bid. Seven Group were acquiring shares from the institutional shareholders, and yet at the same time, you're reviewing the business and trying to turn it around and trying to keep the team focused on the task at hand. How did you approach that challenge as a new CEO and really keep the team focused on turning the business around?
Yeah, look, I won't shy away from it, Alec. It was a really distracting period. We had completed our portfolio review in October of last year. We'd announced the sale of USG Boral. We announced that we were kicking off the process of North American building products. We were in the midst of changing the operating model for the business in Australia, changing out some leadership roles. And we had already kicked off the process of developing what we thought the strategy for the company should be going forward. And then the takeover was announced. So, it was unexpected. From my perspective, at least, it was unwanted because we were making really good progress, and it wasn't something that we really wanted to deal with at that point in time. But you don't get to choose the context that you're operating in. So once again, I think we did a great job on the response to the takeover process. I don't think we dropped the ball on anything else we're trying to do in the background. But we had a lot of people working 7 days a week there for about 3 months. So we got through that, and I'm pleased to say, look, we've now got the clarity of focus on the Australian construction materials business we wanted. I'm really pleased with the leadership team, with the clarity we've got in people's responsibilities. We've got the strategy lined out. Everybody's really clear on what we've got to do. And despite COVID and a bunch of lockdowns continuing to impact construction, I think we're poised to do some really good things.
It's like as retail investors just seeing it all sort of play out in the headlines, I guess some of the questions raised is, around what does it actually mean to have Seven Group as a majority shareholder? Does it change anything significant for you? What does the future look like with them as a majority shareholder?
Look, I think the good thing, Bryce, is yes, they're a majority shareholder and they have to consolidate Boral. So most of the onus and what they've got to do is for them in their financial statements, but it doesn't change what we're doing as a company. The strategy has not changed. Ryan is very supportive of that direction. We continue to focus on our transformation program and how we improve EBIT by 250 million. That hasn't changed. The way we go to market, the way that we think about innovation, the sustainability approach we announced last week, none of that's changed. So, we've got a major shareholder, but I think he's extremely aligned with the opportunity we see in Boral and the direction we're taking.
It must feel pretty good as a new CEO. A takeover can go one of two ways. They can take majority control and clear house and change the strategy. But in this case, they've backed you in, backed your strategy and backed your team. It's a pretty ringing endorsement that a massive company like Seven Group is willing to spend so much capital to get more exposure to what you're trying to do.
Yeah, I'd agree with that, Alec. And once again, I think they're really smart people at SGH, fantastic track record they've had. But once again, I think they saw the opportunity. They backed themselves to take that opportunity where others, weren't willing to do that. But, we've got really strong alignment. I think people like to create stories that there's, any animosity in the boardroom or there's discontent, stuff like that. We don't see that. They get to a level of detail that I think some directors don't, but their motivation is all about understanding how we're performing, what the future looks like, where the opportunities sit, and making sure we're making progress on that. So it's a ringing endorsement, but I think frankly that reflects the quality of the team we've got.
So you mentioned their sustainability, Zlatko, so it might be a good chance to just have a chat about that. Obviously, Boral is heavily in building materials, concrete, cement, you name it. And you mentioned there you announced last week your sustainability strategy, and at the top that Boral is now about building a better future. So are you able to just elaborate on that a little for us?
Yeah, happy to, Bryce. And look, frankly, out of everything we announced in our strategic framework, that's the one piece that I'm really proud of. Not that I'm not proud of the other things, but if you think about the cement industry, it's one of the largest carbon emitting sectors anywhere in the world. And I say facetiously internally sometimes, you can take two approaches. You can kind of huddle in a dark corner and hope it goes away, or you can view it as an opportunity and really think about how you change your business, change your approach, change your business model to take advantage of that. And I am really pleased to say, after a hell of a lot of work in the last 12 months, we've taken the latter approach. So we're taking a leadership position, not just in construction materials in Australia, but globally with the targets we're setting. We're committing to science-based targets. We're signed up to SBTi. We've set ambitious goals, both Scope 1 and Scope 2, as well as Scope 3 emissions. And they're not pie-in-the-sky targets. We spent a lot of the last year working through the pathways of how we take carbon out of our business. Some of those are quick wins. We're doing things like using waste streams as fuel at our kiln down in Berrima in the Highlands. We're at 20 to 25% waste streams today. We think we can get that up to 60%. We're ultimately looking for renewable energy sources. We're working on carbon capture, which is one of the largest components of how we emit carbon into the atmosphere today. But we're looking at how do we capture that carbon from the calcination process? How do we combine it with waste streams and ultimately, ideally, embed that back into concrete so it's permanently stored? So we've done a lot of work, but I think that work then gave me and the board the comfort to come out with those world-leading objectives that we've announced and feel comfortable that we can do that. So really pleased with the work that many people in our organisation have done and the fact that we've gone out on the front foot to set those objectives.
I love that, Zlatko. In a previous life, I worked in the sustainability team at Coles, and my ears picked up there when you spoke about waste to energy. We see, Europe, it's such a big feature of what they do, and it's slowly starting to become a thing in Australia. But it's great to hear, that you guys are on the front foot about it. I think the cement industry is like 8% of global carbon emissions, so great to hear that you guys are focused on it. I guess for a lot of the Equity Mates community, ethical investing and sustainable investing is a really front of mind at the moment, and it seems like for a lot of the broader institutional investing community, that's the same. As an ASX listed CEO, are you feeling the increased pressure from shareholders around sustainability? I guess the crux of the question is, does sustainable or ethical investing make a difference for ASX listed CEOs?
Well, look, I think it's a consideration, Alec, but I'd be lying if I sat here and said that's why we did it. We didn't do it because of that reason. I think we recognise the opportunity, and frankly, it's an opportunity to differentiate Boral. So it just makes good business sense, and it has tangential benefits for the community and significant benefits for the community, but aligns us with a lot of both investor and community expectations. So it's absolutely something that we consider, but it's not something that drove us.
So Zlatko, you've had plenty of years' experience in leadership positions in some of Australia's biggest companies. So let's turn to having a chat about people and culture. How would you describe your leadership philosophy as CEO?
Well, look, there's a couple of things I look for, Bryce, and I really want to surround myself with really great people. You can't do anything unless you've got really strong capability and, frankly, people that are happy to step out of their comfort zone and contribute right across the board. So we've got great people at Boral. We've always had great people. We've made a couple of changes, particularly in senior leadership roles, but it's always about having a great team that's focused on doing the right thing for our customers and for the communities in which we operate. So that, for me, is always going to be important. Clarity on expectations is really important. And I've said this a few times in different forums, but when I joined Boral, the strategy was unclear to me. It didn't lack coherence. We were construction materials predominantly in Australia, light end building products in North America, and then a focused plasterboard joint venture in Australia and Asia. Just that lack of clarity for me in the strategy didn't make sense. So we spent a lot of time looking at the portfolio and building the strategic framework that we've now got to build that clarity and to build alignment. And the last thing that I look for is, when you've got really good people and you've got clarity in what you're trying to do, I use this term internally, freedom within a frame. I want to give really good leaders the ability to be able to react and respond when they see opportunities or challenges, but within the framework that we've all agreed. That, I would say, is still an evolving feast at Boral, because if I look at the way the business was run before, there was a lot of freedom. Frankly, there wasn't much of a frame. So trying to bring everybody back in together and build that alignment's important. So the frame's probably going to be a little bit tighter for a period of time until everybody knows what we expect. But ultimately, look, I want to give really good leaders the freedom to run their element of our business in a way that where they can respond to opportunities and challenges and not have keep coming back to me or the corporate centre to make decisions. So they're the three things I tend to look for in leadership roles and in different companies.
Now, Zlatko, we mentioned at the top of this interview how your hiring process was a classic COVID story, Microsoft Teams and Zooms, but also the turnaround that you've been overseeing has been a classic COVID story. It's been, not a lot of traveling and a lot of Microsoft Teams and a lot of Zooms. How do you approach, and I guess what lessons have you learnt from this challenge of trying to change a culture and reinvigorate a workforce digitally? And what can we and other people trying to run businesses learn from that?
Yeah, I think great question, Alec. I think the inability to travel is a double-edged sword. Look, frankly, I retired from executive life 6 years ago because of travel. So I am not looking for a lot of travel. But in the context of Boral, it's been frustrating because we had businesses in 17 countries, and frankly, I couldn't get out of Australia. So to not meet people face to face, be able to connect to them in a way that I'm used to. Meet with customers and view the operations, that was extremely frustrating. But when you don't have an alternative, this kind of forum, either phone calls or Zooms, that's all you've got. So you've got to do the best you can. And frankly, when we're going through the portfolio review, I was spending a half day with North America every morning, just going through their businesses, talking about their performance, talking through products and customers. And it worked. We got an outcome, and might not be as good as you'd ideally want with face-to-face connection and all the non-verbal cues you get, but we got an outcome. So I feel good about our ability to navigate. The cultural piece is a little bit different though, and particularly in a company like Boral, where I didn't understand the history or the depth of how people felt about the company. It's dangerous to go away and start saying, well, now this is the culture that we want. So what we embarked on towards the end of last calendar year was the first very, very detailed culture survey that Boral has done in a really long time. And we had 5,000 people across the organisation contribute to that. And that for me, guys, was an opportunity to really delve into how are people feeling, what are they thinking, where are the opportunities, what do we want to retain and continue to foster across the business. And what really came through was that people are proud of the company, proud of what we do, but viewed that we were slow. We weren't as nimble as we needed to be. We weren't as innovative as we needed to be, and we didn't collaborate as much as we needed to. So with some of those cues from that survey, with things that we had observed, and based on my views of how I wanted the business to work in the future, we defined our purpose and values, which we launched across the organisation last month. We defined our operating model and the leaders we would put into key roles, and communication is part of that. It's absolutely critical. So, from day one, my first morning on the job, I spoke with the leadership across the organisation, and the next morning I spoke with the entire organisation over Zoom. We've continued with regular dialogue using whatever means we can, and we continue to do that. Straight after this call, I've got another call with the top 100 leaders. We're trying to do that on a fortnightly basis just to build that alignment. So, I wouldn't changing culture when you can't see a lot of people face to face is tough, but comms is always important. Transparency is important, and staying connected is really important.
Zlatko, before we move to our final three questions on the future of Boral, just one on growth. We talk about here at Equity Mates the importance of building a thesis when you're investing in companies, and obviously a big part of building a thesis is to understand drivers of growth at an industry level and then what it means for the company. Are you able to sort of just briefly, I guess, highlight what are some of the big areas of growth that you're expecting to see over the next sort of 12 months or so?
Yeah, it's a really, it's an interesting question, Bryce, but sometimes it's a vexed question. So people have always said to me, as we think about portfolio actions that we're taking, that we're shrinking back to Australia and we're ex-growth. Frankly, when I look at business, I don't look for top line growth. I'm looking for bottom line growth. And anyone can go and buy revenue. That's not smart. Whether that's a good investment and whether you do the right thing once you've grown that revenue base through an acquisition, that's the real challenge. So what we're focused on is how we grow earnings at Boral. That's the important thing for us. So we've done a couple of things in that space. One is we came out in February and we spoke about our what I'd say is a really significant transformation objective we've got in the Australian construction materials business. We delivered 157 million of EBIT in FY21, excluding property. Our target is to deliver 200 to 250 incremental EBIT over the next 3 to 5 years. And we think that's opportunity that's embedded within the business. We're not reliant on the market conditions, which frankly are pretty soft at the moment. We're not relying on pricing, which in a tough market condition you shouldn't rely on. So it's all about self-help. And it goes back to our thesis around if you run construction materials in Australia as a national business, it unlocks a lot of potential. And I think that potential is within our grasp over the next couple of years. We then think about what are the adjacencies and how do we move into some of those adjacencies where we can bring our skills, our asset base, our capability to bear. And one of the really interesting ones is recycling for us at the moment. Alec touched on it earlier, but when we think about recycling, we're looking at how we use our quarries for landfill in particular. We dig up stuff, we crush rock, and then it leaves a big hole in the ground. Well, down in Deer Park, we've used the quarry void for Cleanaway to put municipal waste into. That makes sense for us. It's an asset we've created that historically we haven't been monetising. We're looking at waste to energy. So how we change our fuel mix down in Berrima from what was a number of years ago 100% coal to more waste streams and ultimately something that's sustainable. We see opportunities to make significant money off the back of that. The really exciting one, though, is waste materials. So we have had a couple of recycling centres around the country, predominantly in Sydney, where we take construction and demolition waste, we process that, and then we put it back into either concrete or asphalt. So it's more of a closed loop circular economy concept. The work that we've done more recently, we see a significant opportunity in that space. So we're now working with a lot of property companies, construction companies around how do we manage and support them in their demolition process to take waste away, give them visibility on where those waste streams are going. They're not ending up in landfill. We process it, and ultimately, ideally, it ends up back in the concrete that they use on their new construction. We see a significant opportunity in that space. So that's an area where, if we can deliver on what I think the aspiration looks like, it'll create an adjacent growth area that, for many, many years should create another revenue stream and earnings stream.
Zlatko, you were speaking my language there. You're reminding me why I loved working in the sustainability team at Coles. I've actually been to that Cleanaway landfill down in Victoria and seen your teams quarrying out there. So it's all bringing back a lot of memories for me.
Ren loves waste.
Yeah.
Well, mate, I was on the Coles board, so I love Coles.
Yeah. Well, let's stop this waste and Coles loving and move to the the future for Boral, both short and long term. We always like to finish these interviews with what's in the future for your company. So if we start short term, if you think about the next 12 months for Boral, what's in the pipeline? What should we expect?
Yeah, I think what you should be looking for is a really strong focus on execution, guys. If I think about the last my first 12 months, it was all about those macro moves. So what should the portfolio look like? What is the culture and operating model we want to develop? What is the strategy that we want to pursue, and how does sustainability fit into that? They were all really meaty opportunities that we had to deal with. FY22 for us, and particularly the next 12 months, is all about execution. We're now going to focus on construction materials in Australia. We've identified what the strategy framework and sustainability strategy is going to look like. We need to now prove, because frankly, Boral hasn't got the best credibility in the investment community based on people's experience in the last 3 to 5 years. We've got to prove that we can deliver on these plans that we've set. How do we make the Aussie business a hell of a lot better? How do we unlock the value? Because we're organised on a national basis, how do we prove that we can capture some of the opportunities we see? And I think we're looking for that, and I'm sure the investment community is looking for that. because last year was not about the nuances of how we run the business, but this year needs to be. We've got to deliver, we've got to show that execution, and we've got to make progress on the sustainability journey that we've set ourselves on.
So Zlatko, in terms of risks, there's always a multitude of risks facing any business, but if you were to narrow it down to just one, what do you think the biggest risk facing Boral right now is?
Oh, look, you're right, Alec. Look, we tend to talk about 20 to 30 risks that we're always
name them all.
Yeah. Journos. I start with that.
Nice.
Look, the biggest thing on my mind at the moment is confidence in the construction sector. Yeah, we managed to operate throughout all of 2020 without construction being shut down. There were some restrictions in Melbourne through the elongated lockdown they had. And even through the first half of this calendar year, construction continued. What's happened in July and subsequently into August was unprecedented. That, for me, is the biggest risk to the to not only our business, but to the sector and the broader economy, because construction is one of the largest employers. So how do all participants in that sector provide confidence in construction so that we don't end up seeing shuts and restrictions like we've got at the moment? That's the biggest risk, because it's not just the commercial or economic risk. Frankly, guys, when you've got to sit down with 630 people like we did back in Sydney in mid-July and stand down people, and you can't give them clarity on when their job's going to be back up or when they're going to have work again, that's just not a conversation you want to have. Like, the human impact there, people have got mortgages, they've got commitments. That's not something that any of us like to do. So if we can provide confidence around construction, whether that's vaccination rates or RAT tests that might happen on a site to just keep construction open, that's the biggest thing that's taxing my mind at the moment.
And then Zlatko, final question. We're long-term investors here at Equity Mates, and we like to think long-term. So if you think about Boral in 10 years, what does success look like?
Well, mate, my successor, who will undoubtedly be a woman, will be focused on construction solutions. So, as I said at the outset, we probably would have historically defined ourselves as a concrete and asphalt business with cement and quarries. But, what I'd really love to see Boral in the future is a really diverse organisation that's got that solutions mindset and moving away from a focus on materials, but solving customers' pain points, right through, including sustainability, including the focus in innovation that we've got, and being a real partner with communities. If we can do that over the next decade, which I've got no doubt we can do, everyone's passionate about that journey, that's where I'd love us to be.
Well, Zlatko, unfortunately we have run out of time, but we certainly appreciate the time that you've given us this morning. It's been an absolute pleasure talking to you, and I know that a lot of our community will have taken away a lot from that interview. It's always great to hear from the mouth of the CEO about how they're thinking about their company and building value for shareholders. So very much appreciate it. It was great fun.
No, I appreciate the opportunity, guys. I've enjoyed it. Thanks.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.